Hey there, fellow investors. Today, let's talk about building a reliable and simple portfolio that won't keep you up at night. You know, investing doesn't have to be complicated to be effective. Let's start with the foundation: ETFs, or exchange-traded funds. Think of them as your investment portfolio's best friend. They're like buying a pre-made basket of various stocks, bonds, or other assets. For example, if you invest in an S&P 500 ETF, you're instantly diversified across 500 of America's largest companies. Pretty neat, right? I'd recommend starting with broad market ETFs that cover different sectors and regions. Maybe allocate about 50-60% of your portfolio here. Now let's talk about individual stocks. While ETFs give you that solid foundation, adding a few carefully selected stocks can potentially boost your returns. But here's the key: stick to companies you truly understand and trust. I'm talking about businesses with strong fundamentals, consistent revenue growth, and competitive advantages. Think companies like Apple, Microsoft, or Johnson & Johnson, businesses that have proven themselves over time. Keep this portion to about 20-30% of your portfolio. Here's where it gets interesting: cryptocurrency. Now I know crypto can be controversial, but in today's portfolio, having a small exposure might make sense. And I mean small, we're talking about 5-10% maximum. If you're considering crypto, Bitcoin, or Ethereum are generally considered the more established options. Remember, crypto is highly volatile, so never invest more than you can afford to lose. Now the big question: should you trade actively or go for long-term investment? Here's my take. Unless you can dedicate several hours daily to market analysis and have a solid strategy, long-term investing is usually the smarter choice. The math supports this too. Studies show that about 90% of day traders lose money, while long-term investors historically have done well by simply staying in the market. Here's a practical way to implement this. Set up automatic monthly investments, rebalance your portfolio maybe twice a year, and resist the urge to make frequent changes based on market news or emotions. Think of it like planting a tree. You don't dig it up every few days to check the roots. You water it, give it time, and let it grow. Remember, the key to a reliable portfolio isn't finding the next hot stock or timing the market perfectly. It's about building a diversified, manageable portfolio that lets you sleep well at night while still working toward your financial goals. Keep it simple, stay consistent, and give your investments time to grow.